Those who consume interest will stand on judgment day like those driven to madness by Satan's touch. As for those who persist, it is they who will be residents of the fire. They will be there forever. Surah Al-Baqarah, verse 275. In Islam, riba, interest, is such a heinous sin that Allah threatens those who consume it to eternal hellfire. If it's such a heinous sin, why do Islamic banks still do it? Millions of Muslims choose Islamic banks believing they've escaped riba, but the numbers on their statements say otherwise, and many of them only realize the truth after they signed a 30-year contract. By the end of this video, you'll see why Islamic banking always ends the same way. The most common financial instrument Islamic banks use is murabaha. This is called cost plus financing in English. Murabaha promises interest-free financing, where the bank shares risk. This means that the bank should share in the profit and loss of your business. Or, in an Islamic mortgage, in theory, profit is supposed to come with exposure to loss. In practice, contracts assign those losses to you, while the bank keeps its return fixed. Here's what actually happens. During an Islamic mortgage, the customer puts down a down payment, and the customer owns part of the house. The customer pays rent to the bank based on the proportion of the bank's ownership of the house. Suspiciously enough, this rent rate somehow matches that of a conventional mortgage interest rate, so you end up paying more than the original price of the house. Doesn't this just seem like interest? And if you can't pay, they will treat it as a default. And if a natural disaster happens, it comes from your insurance or your pockets. Let's say a tree falls in your house. It costs $50,000 to repair. Who's going to pay for it? Not the bank. It's coming out of your coffers. Who really owns the house? Plus, they don't even maintain the house for you. That money comes from your pocket as well. Why is it like this? Why does the bank do murabaha transactions and not invest in businesses with mudaraba or musharaka, the true profit and loss sharing way? It's because they need quick returns rather than long risky investments. The bank gets their funding from depositors, and these depositors want a fixed interest rate. On top of that, shareholders want maximum quarterly returns. A bank that loses depositor confidence, even briefly, dies. That single fact explains every compromise Islamic banks make. Banking cannot tolerate failure, and Islamic finance requires accepting it. You cannot mix the two, or else you get a contradiction. This begs the question, if it's so haram, why did Muslim countries build Islamic banks in the first place? It comes from our colonial legacy. Colonial powers built these banking institutions within our financial infrastructure for hundreds of years. On top of that, once we gained our independence, we needed ways to scale state development fast. Banking utilities provided the pathway for that. Once this system was in place, our financial fate was sealed. The post-colonized nations of the world still had remnants of colonialism through their banking institutions. Let's take a look at Sudan. In Sudan, 1983, a nationwide Sharia was passed. One of the goals was to convert banks to Islamic ones, and have these newly converted Islamic banks fund profit and loss sharing ventures in agriculture and industry. However, Islamic banks failed to act as development banks as intended. Islamic banks acted as conventional banks in not taking much risk when lending, and demanding short-term guaranteed returns. This was due to the demand for instant returns nature of banking, which made it impossible for profit and loss sharing to happen. This situation was even worse than if Sudan had kept a conventional banking system. This is because Islamic banks essentially still acted as conventional banks, but now monetary policy tools to control banks were gone. This was a recipe for disaster. It contributed to severe inflation, currency flight, and long-term economic damage. Now let's compare this to Malaysia, which didn't try to force Islamic banking, but let it coexist alongside conventional banks. Even though the economy didn't collapse, it was still a moral failure. Islamic banks in Malaysia, to this day, still practice majority murabaha instruments. All this means is that no matter how you try to practice Islamic banking, the outcome is inevitable. Islamic banking is an oxymoron. You cannot have banking and have it be Islamic at the same time. There's an important story from the Quran, which is the story of the Sabbath. The children of Israel were commanded by Allah to rest on the Sabbath, Saturday, and to not fish. They were being tested by Allah, as fish was abundant on other days but not on the Sabbath. They tried to circumvent this by setting up fishing nets on Friday, making the fish swim into them on Saturday, then collecting it on Sunday. As a result, Allah punished them by turning them into apes. When we make these Sharia-compliant contracts, are we trying to fool Allah? For a long time, I wanted Islamic banking to work. I needed it to. I wanted to think that we will be able to fit in this modern financial system, but we can't lie to ourselves. Riba is riba. No amount of legal gymnastics or Arabic jargon can change that. We may never live to see interest be fully abolished, but we should try our best to make progress. Just like those who died in the Battle of Badr never lived to see Islam grow into an empire. It's tempting to give in to owning a house in this world, but what about owning a house in Jannah?